All right. Hey there, everybody. Christopher Inks with Texas West Capital. Checking in live here a few minutes after 11 a.m. Central Standard Time on, what is this? The 11th of April, 2023. Good to have you guys checking in. Still trying to get used to the new platform, so I apologize if it's a little bit Yankee at the moment. But we're working on it there. Good to see you, Nevlusian, checking in. Kimosabi is here as well. He says, what'd you say there? Notifications are actually working. Nailed it. Nice, nice. Hey there, Frank. Good to see you as well. So man, oh man, listen, we've got a heck of a thing happening right now. Bitcoin's finally broken out above 30,000, right? Question is, how's it going to keep on going, or is it going to keep on going? We're going to get a pullback, so we'll take a look at that today. We've got the CPI coming out tomorrow, guys, which could potentially put even a short-term damper on the Bitcoin rally, but that should be all it is just short-term if it does. Either way, again, we do have some counts we're watching, so we'll talk about those. We'll take a look at Ethereum as well. We'll look at the dollar, which should continue lower. And look at some other ones as usual. CMAC, good to see you checking in. It says happy day. It is, isn't it? For those of you that are new, maybe just checking in. We've been talking about this rally that's been going on here since November. So I was one of the few ones out there talking in November about the lowest price quite likely being in and how we would advance from that. And we've pretty much done what I've talked about, since that time. If you're in doubt, of course, you can always go check the archive versions of YouTube here, or you can check out my Twitter timeline there, my feed, and you'll see that what I'm saying here is true. So at this point, I think bears for the most part are finally probably giving up, which is a little bit iffy because if they really are, then it is it could potentially be nearing a short-term top anyway, a local top. But again, all it should be is just a simple pullback. I don't see that there's any reason right now even to believe that we're going anywhere near 18, 19,000 again. Now that could change depending on the new information that comes in day after day with the charts. But right now, the way it looks, that doesn't look like that's anything that's going to happen. So we'll take a look at that. Who else is here? Gareth. Good morning. Good morning. You see the Texas bill for a gold-backed currency. Thoughts? Yeah, I saw that too. I've got to look more into that. The constitutionally, states can't set their own currency. So I'd have to go check and see exactly what that bill is touting. I meant to do it this past weekend, but man, I don't know about you guys, but man, that holiday weekend just kind of flew by. I was busy the entire time with family stuff. And next thing you know, it was Monday, and we're like, what the heck's going on, right? So yeah, I'll have more thoughts on that maybe Friday if I get a chance to look at that before then, and then that way we can kind of see what exactly they're talking about there again, because states constitutionally are not able to create their own currencies. The U.S. currency is the only one that kind of sits there, right? Data Aeroquin, good to see you guys checking in as well. You guys will have to forgive me. I have not got the new camera set up yet. So I'm kind of working with this janky camera here at the moment. So anyway, yeah, checking in here, guys. If we look here at let me see if I can kind of make this bigger for you. Maybe something like that. That showed up a little bit better there. We can see here that the CME FedWatch tool shows that the market's pricing in at 69.2% the likelihood, the probability of a 25 basis point rate hike coming up here in just a few weeks. I believe it's May 3rd Yeah, May 3rd over here. Um, but still a 30.8% chance of no, of being flat. I think this will, a lot of what will go into this is how the CPI looks tomorrow. So if CPI comes in, at expectation or better, then likely, we're likely to see this. If CPI comes in short, if it comes in lower than that, depending on how significant, if it's just a little bit below it, I think we'll still probably look at that 25 basis point rate hike. But if it comes in, surprising significantly to the downside, a big surprise to the downside, I think there's a good chance we could end up flat at that May meeting. Now, I've been talking about the idea that we would probably get, one more 25 basis point rate hike, and whether that means it comes in May or we get flat May and then we get one, a 25 basis point rate hike at the next meeting. There in June, not in June, but in June. That's been kind of my idea, right? What is it? Not June. Yes, it is June. Okay, it is June. It's been a day, guys. But anyway, so either way, I'm still looking for probably a 25 basis point rate hike. So again, whether that's in May or we're flat in May and then we get it in June. But I think there's a good chance that that's probably the last one. And then we go flat and or reverse, probably coming into the end of the year. Again, the Fed is really, really adamant that they're not going to lower the rate this year. It's like anything else. When you're looking at the markets, guys, and the market's all like, oh yeah, we definitely going to do this. Usually the opposite happens. The same thing with the Fed. The more adamant they are about doing something, the more sure they are they're going to do something. Usually they don't. And so that's way, that I'm usually looking at it. So I think there's with their adamancy that they're definitely not going to lower rates by the end of the year. I think there's a good chance they probably could. So we'll see what goes on there coming in with it. Let me see here. Hank Bamboo, what's going on, guys? Andrew Bennett is here. Deadly123, what's up? Brian Riley checking in. Hank says if you look at worked hours, it will actually be lower. Yeah, so again, it's not just the headline numbers, guys, as we always talk about. It's how many hours are being worked. What is the, is that decreasing or increasing? What is the month over month hourly wage? Is that increasing or decreasing? Those kind of things go into it, because the idea is the more hours you're working and or the more you're getting paid, the more money you have to spend. The more money you have to spend is more money potentially going after the same limited goods, which causes price increases, right? So that's what the Fed's kind of looking at with those things. So that's why we're often dissecting them when those numbers come out, right? Let me see here. Baltazar, what's going on? Good to see you. Michael Johnson, what's up, man? Deadly123 says, get in tier 3. We're sharing ideas on Bitcoin around the clock. Trade safely. Yeah, they are, man. You guys are getting kind of active over there in the Bitcoin channel now, giving some great ideas and some great thoughts. Good target levels and invalidation levels and stuff as well. So definitely good. It's good to see people getting kind of active. I think people are starting to finally maybe believe that a bottom may be in, right? But as always, guys, bottoms and tops are processes. They're not absolute highs and lows. And if you're a trader, that's often the problem that you face, because you come in thinking that, okay, you want to buy that absolute bottom and you want to sell that absolute top. But the problem is, even if you're a seasoned trader, you're going to rarely get close to that, okay? Again, I've been doing this, almost 30 years now. I don't regularly catch the very highest price or the very lowest price. And I don't try either anymore, because it's a fool's errand. Once you understand that tops and bottoms are these ranges that occur, right? Tops are these distribution ranges, right? Because the market doesn't reverse on one candle, right? It can pull back, but the totality of the distribution takes more than one candle to happen, right? Same thing on accumulation. And that's why you spend time going sideways, even though you might have an initial reaction at that swing, at that swing higher, that swing low. Price is generally going to go sideways for a bit before you end up continuing in that opposite direction, right? So I think one of the biggest things that traders can do for themselves is to really kind of seek to understand what I just said there about tops and bottoms. Because if you can do that, that's going to give you a great basis for understanding overall, market movement, price movement, and how you're looking at it. And again, how you perceive the market is going to affect how you trade it, right? Hank says everyone who caught the bottom caught the previous 30 bottoms before that as well, right? Yeah, exactly. Everybody in hindsight caught it, right? But again, we've been talking about this since then. Matter of fact, we've been talking about it since the June low, right? I was discussing back then how that began the bottoming process, the accumulation process, right? And then we talked about how November was that terminal shakeout. And again, prices pretty much continued up almost in line with exactly what we were looking at there. Whether we looked at it, we looked at it both with Wyckoff, we looked at it with Elliott Wave, and we've been also looking at it with that dragon pattern as well. So a lot in there, right? Let me see here. Fernando, good morning. Good to see you. Tejo, good. Hello there. Fernando, checking in. Yes, I see you there, Fernando. Andrew says it's all time very soon, if not now. Man, people been kind of hanging out for that alt season, right? But I don't know. I don't know if it's ready yet. I don't know. I mean, it's coming up, but I don't know just how close it is yet. If Bitcoin continues this crazy kind of push higher, like I'm thinking there's a chance we might, similar to kind of what we saw in 2019, it might be a little bit before we actually get alts going, really going. So, be careful with that. Be looking for it, but don't jump in until you have some confirmation that it is, guys. Because again, there's that saying that everybody likes to put around, which is that the market can stay irrational longer than you can stay liquid. Very few people really understand what that means, but generally what it means is you should be looking for confirmations, not just jumping in because there's a chance, right? On that. Should we worry about a market dump? I don't know what you mean, a market dump. It sounds like psychological words. What I mean is people, especially newer traders, tend to often use words like dump and crash and market this and that. And really, the words are just psychologically based, right? Like somebody would say, oh man, Bitcoin's going to crash. Well, what they mean is going to drop $2,000. But $2,000 from 30,000 isn't even 10%. That's not a crash, right? That's not even really a dump, right? That's a pullback. It's a small pullback. And so I always get, a little bit careful when people use words like that because it doesn't often mean what most people are going to read it to mean, right? So if you can explain that a little bit better, what you think you mean there, then I can probably answer it a little bit better. Let me see here. Michael Johnson says, proud to say that I caught the wick low on the March 10th dump at 19,550 on Kraken. Price went to 19,549 and 99 cents. Total fluke. Now, the best part about that is Michael realizes that he just got lucky getting it so close to it. And you are going to get lucky from time to time, guys. I'm not saying you can't. But I think the important thing to profitable trading is understanding that is luck when you get it that close. Unless you're consistently doing it. If you're doing it, every 3 out of 5 times, well, then you can say, okay, you've got something, right? But I don't even claim to have something to grab that every single time. I think Hank got a pretty good entry the other day there on LDO, I think, right, Hank? You were right there on that. But again, these are more, even for people who have been trading for, decades, these are more one-off events than they are, consistent. But again, and if that's the case for people who have been trading a long time, right, and continue to do so, then, if you're newer, you should take that and go, okay, yeah, I need to really start working about just recognizing where the bottoms are, those ranges, and where the tops are, rather than the highest and lowest price. Let me see here. 3-day Death Cross. Hello, good to see you, sir. Let me see here. Brian asked, do you think that crypto regulation, what are you saying here? Do you think crypto legislation is slow intentionally to make the market seem illegitimate or just generational ineptitude? Honestly, guys, a lot of times with things that are going on there, especially when we're talking about the government, we want to believe there's some big, huge conspiracy. But really, most of the time, I think it's just people. It's just people, right? And so, everybody's got their own kind of goals and their own kind of beliefs. And so, when they're working in a group, all these things are coming in together. I I don't think that there's anybody out there specifically trying to make it slow and whatever. I mean, there may be a person here or a person there, but I think if you're saying government in general, it's just people, guys. It's just people doing things, and I don't think that it's um, really intentionally, as far as the whole governmental unit goes, doing that sort of thing. Okay. Let me see here. Let me kind of catch up here. So that's what we're kind of looking at there. By the way, I don't know if you guys noticed this, but MetaMask, apparently you can buy crypto with fiat currency in 189 different countries, which is basically just about every recognized country by the U.S. Out there. Now, I don't know if this includes the U.S. I haven't had a chance. I just kind of caught this right here before the today's stream. I don't know if any of y'all know about that, but man, if we're worried about a liquidity issue because people can't on ramp, I mean, at least for retail, there is this right now. When you look at liquidity via large money coming in, well, then it becomes more difficult because large money, is going to have to come in that other way, right? But again, even when you're looking at that, if you're doing over the counter, right, things are a bit different, right? I could choose to sell you $160 million worth of Bitcoin for a couple of Rembrandts or something, right? I mean, it doesn't even have to be cash. So I mean, there's a lot of possibilities around that. We'll see how things continue to go. But if you're a large fund or something, you kind of need that fiat on ramp and off ramp to be able to go in. So if you're doing that, then if your bank, if your bank was Signature Bank or something like that, and it's gone down there and you can't use it anymore, well, then that provides, is going to provide liquidity issues, at least here in the U.S. for crypto, right? But crypto is worldwide, and and that's right. But again, as I've continued to say for years now, people kind of take offense to it when I say, well, the U.S. is important to the crypto market because it is such a large portion of it, right? That hasn't changed anything, guys. You don't have to like the U.S. You don't have to like me as a U.S. citizen, regardless of what I think of the government, right? At the end of the day, reality is, facts are that a significant bit of the money that's flowing into crypto does come from the U.S. So, if the U.S. is cracking down and makes it difficult to get in, then cryptos in general are going to have difficulty. They're going to have liquidity issues. I mean, it just is what it is, guys. It's like saying, okay, well, if you go, okay, well, Chile, and this isn't picking on Chile, right? But if you say, oh, well, Chile can't get into crypto as much now, they're facing this issue that the U.S. is, right? Well, I mean, that's not such a big deal because Chile's input, money coming in to crypto is very, very small, right? The U.S. is not, though. So, I mean, just things to think about, guys. We definitely want to see some greater inroads, made as far as on-ramping and off-ramping here in the U.S. Right now, we're just going through one of those moments, I think Gensler's off his chain. He's just getting kind of crazy. And I think he may believe that he has more power than he does. He's taking on too many battles at once. I think, man, I would hate to be in the SEC right now trying to, just be in there and having to deal with all this nonsense. Chris, what's going on? It says, why is the market pricing in 3 hikes when the Fed is going to hike and hold? Rude awakening when the market comes to terms, or is Fed wrong? Well, the Fed's generally behind. Historically, the Fed does not usually follow through on its month-to-month things that it says, or even year-to-year. They again, coming into QT back in, what was that, 2021? They were like, oh, we're not even going to raise interest rates or start QT until 2023, right? And that was when I told y'all back there, what was like April or May, I said, no, they're going to start QT in November, most likely. Rate hikes coming in, following that the next year. And that's what they did, is what I said, right? But it wasn't what the Fed said. The Fed was holding out for another year, right? So, the Fed often says, this is what we're going to do. But I think a lot of it has to do with them trying to get you to believe it so that you react accordingly so that they don't have to. The Fed knows that if it intervenes in the market, it's going to cause effects that it can't foresee. Everybody wants to talk about the Fed and Jerome Powell and them like they're idiots. They're not idiots. These guys have PhDs and advanced degrees and all this stuff. They're not stupid. Okay. And this is not me protecting. I'm just saying, let's be realistic here, guys. They're not idiots. They know what they're doing. Now, does that mean that they know the exact outcomes? No, but I think that they understand that too. I believe that they understand that they don't know the exact outcomes of things. They're hoping it does, A, B, or C, but they're also aware that it may do a lot worse. And, if they're not, it doesn't make sense, right? Because historically it's shown, right? So, again, I don't think they're idiots or anything. I think a lot of what they say has to do with getting you to do things yourself so that they don't have to. Because once you intervene in the markets like that, you create second and third effects, right? And a lot of times, we're human beings. We don't know what the results of every decision we make are going to be, right? Because you make a decision, even if it's just a yes or no, right? You got a decision tree that looks like this. So if you choose yes, and you go that way, right? Well, now you got another question, yes or no. Well, so now you can branch off, and then you get another one and another one. And human beings, we're inherently fallible, guys. We can't possibly know the outcome of, of this huge decision tree, right? But I think people, they talk a lot of crap about, the Fed and whatever, and I do too. But mine isn't, from the view that they don't know what they're talking about. They're idiots. I think that kind of view is just silly. Now they can be blinded a bit, by their personal beliefs and whatever as to the extent of what they think may happen or may not happen. But to say that oh, they're idiots and they're stupid, I think you're just really showing a lack of understanding yourself, because that doesn't make any sense, right? But again, I think, again, they're going to they have their things that their mandates that they have to figure out. By the way, guys, I wouldn't want to be in the Fed. I don't, just like president, I wouldn't want to be president. No matter what you do, you're going to screw it up. And then people are going to blame you either way. Why would you want to be in that position? It makes no damn sense. Everybody thinks they're smart. They know what can happen. Even I think, oh yeah, I know you can do this, that. But really, nobody knows. We don't know. We think we know, right? Hey there, Juicified. What's going on? You don't like me? They're not stupid, but they're also not smart. But yeah, again, guys, there's so much going on that most of us don't even recognize that the Fed has to deal with when they're making decisions, right? So at the end of the day, I think the best way you can approach it to understand the Fed, or many central banks, but especially the Fed, is that they don't want to have to do anything, because once they do something, they're getting involved. Well, now again, there's second and third term effects that they're likely not going to foresee, and they understand this, and they know that the more that they intervene in the market, the more these issues come up. So they want to do. That's why I always tell you, they use their mouth more than anything. They want you to believe what they say so that you act accordingly. What they believe, that what they say they're going to do, so that you act accordingly, so they don't actually have to do it. I mean, I think that's the best way to approach the Fed. And if you do that, you end up a lot less depressed about them and a lot more understanding of the fact of, that they're not really stupid. They just, the job they're doing, no matter what they do, when you intervene, guys, you're going to create issues. There's no two ways about it. There are no real, true free markets in the world. Somebody's always intervening. We try to talk about it a lot, but we don't have it. In the market, if you've got licensing and things like that, I mean, you're intervening in the market, right? It's already not a free market at that point. So let me kind of catch up with you guys here real quick before we get into the charts. Let me see here. Crypto Raid, what's going on, man? Says your thoughts on China, Russia, Saudis, etc., moving away from the USD, as well as macro and hidden UE should think about doing the same. Well, again, everybody's worried about the US losing reserve currency, right? But the world debt, 65% of it is denominated in US dollars. 5% in the Chinese yuan. Guys, it's nothing. Even if that were to happen, it's nothing that's happening overnight. It's going to take years and years and years to get there. I think anybody that's even suggesting that's going to happen anytime, within the next few years, just really doesn't understand how, global finance, reserve currencies, all that kind of stuff works. It is nothing that can happen, just like that, because the world itself is so caught up in everything. Remember, the idea of a world reserve currency is an easy way to so that nations don't have to trade back and forth in their own currencies, right? They can just trade in one currency, U.S. dollar, right? It just makes it easier to commence trade between all these different countries, right? But again, over 60% of the world's debt right now is held in U.S. dollars, which means it has to be paid in U.S. dollars. Okay, it's U.S. debt. People that have taken out, U.S. debt, and so it has to be repaid in U.S. dollars. 5% of the world is Chinese yuan. So nowhere near. So yeah, they're going to talk about it. They're going to talk about it and yak about it and whatever. It's not a big deal right now. Could it become a big deal in the future, years down the road? Sure, but right now, no. No. And when you do a world, a reserve currency, there are things that come into play. You have to be the biggest or pretty close to the biggest economy out there, right? You have to be able to import and export significantly into the world, right? I mean, these are all things that go in there to do this, right? You have to have a military that can back it, right? To keep, because if your military can back it, it can protect your country, and is formidable enough worldwide. Well, then, that gives more strength to that currency, because the idea is that the government will continue, so the currency will continue, blah blah blah. So there's a lot of points in there that I don't think most people really recognize there. With that, Hank says, excuse me. Hank says that even if they set up clearing for all these currencies, they will still calculate the price in USD before converting. Yeah, there's just so much to it, guys. It's not as simple as social media would have you think. Okay. Drusified says, what'd you say here, man? They need to segregate rates and treat them independently instead of all in one basket, i.e. housing rates, auto rates, student loan rates, credit card rates, etc. Yeah. Yeah, there is a lot of things that come on there, right? Let me see here. Data says being president is not about doing the right thing. It's about being president. If you care about the opinion of others, it's not the right job for you. Yeah, I mean, that's exactly it. Again, guys, a lot of my structured educational background went into theories of power, right? From philosophical and economic backgrounds, right? Coming into that. And the reality is, it's not that power, corrupts. It's that those who intend to use it are going to go after it. Those who don't want to use power are the ones you want to have the power, right? But they don't want it. They don't want to use it. The ones that end up getting in positions of power are the ones that intend to use it. So yeah, I mean, that's not cool, right? Because, it doesn't mean that they necessarily are terrible people, but it means that whatever they believe, they intend to enforce. Again, you don't have to believe that Bernie Sanders is a terrible guy, but but if he gets that power, even if he really believes, I'm not sure that he really believes the stuff that he says, but even if he does, his intent is to use that power to do it. Regardless of what the effects really are, So, I mean, again, that's just power, right? That's what goes on there. So, a lot of good times on that. But anyway, let's kind of check into, let me see here. Let's pull up a chart here, guys. See if I can find it here real quick. Oh, you guys doing all right today? You guys having a good day? I hope so, man. Let me see here. I think we've got it right here. Come on, get on there. It doesn't want to go with me here. Sorry, guys. Give me a minute here. Trying to get it up. There we go. All right. And let's put that in there now. All right, there we go. What's going on, LXT? So we've got this right here is the DXY. And let me see again if I can make it a bit bigger here and maybe just give you guys Better look at it, right? Let me kind of pull these over here a bit. Let's see. All right, there we go. So there's the DXY. This is the weekly, guys. Again, nothing that we didn't believe was going to happen. Again, we rallied up here. We got rejected. Well, we rallied up the beginning here, back here in January 2nd, the week of January 2nd. We had this big rejection, which pulled us down. We wicked right below the previous support, which was a swing low, which was back here in the week of May 30th of last year. We rallied back up, wicked up just above that previous rejection at the beginning of this year. Again, this other doji candle with this large upper wick coming out, and then fell back down. So, again, I don't see any reason to believe that that we won't head on down here toward the S1 pivot on the weekly. It's right around 93.5, 94 handle here on the DXY. Could this be a head and shoulders here? Bamboo asks. Again, I'm not a big fan of head and shoulder patterns because they're so easy to misconstrue, right? But I guess if you were looking at it, I guess you're probably looking at something like this, right? Here. Oops. We'll get it kind of done here. Maybe something like that. I mean, yeah, you could. I'm not an overly big fan of this idea. The shoulders are really small compared to the head. If it is, your target based on the height of this, let's see here. Let's get this up here on the swing high to the swing low here. You're probably looking down here around 88.77. And I mean, the target's not terrible. It's this most recent swing low over here at the bottom of that January, that first week of January 2021. It would be right around that swing low, which is just prior to the swing low over here in the week of February 12th in 2018, right? And those, of course, if you're losing that area, again, you just have you kind of a free fall here down into the lower 80s, right? So, I mean, if you want to look at that as a head and shoulders, you can. I'd prefer not to myself, just because I'm not a big fan of these types of patterns. But yeah, I mean, I guess you could kind of see it like that. Let me see here. Hey, what's going on, Nello? I hope I said that right. I hope it wasn't like the two L's make the Y sound. Neo, maybe. Anyway. Yeah, okay, I'm probably just embarrassing myself more there, but how are you doing? Good to see you checking in. Juicified says small heads plus big shoulders equal a Goomba pattern. Let me see here. So I think, again, generally speaking, I would expect this kind of thing is draw down toward this S1 pivot on the weekly. I mean, if this is going to be the top up here, generally what we would expect now that we've dropped down below the pivot, got rejected at it, we're about to drop down lower here, we would expect this move down toward this area, rally back up to the pivot there, and then continuation down is generally what we'd say. Okay? Now, if the DXY drops, Bitcoin will pump hard. I don't necessarily know that I believe that. Again, remember, it's not a one-to-one relationship, so it isn't like, the dollar drops, a handle, and Bitcoin rallies a handle. That isn't how it works. As long as the DXY continues to decline, what that does is it takes downward price pressure on USD denominated assets. Okay, that's all it really means in the grand scheme of things. I mean, that's what you're looking at. If the value of the dollar is dropping, which means the DXY is dropping, right? The value of the dollar relative to other currencies, right? Then what that means is it takes more dollars generally for the asset, right? To purchase the asset, which the price then, it takes off that downward price pressure on the asset. But yeah, it's just one part of it. We can find areas where the DXY and Bitcoin have moved simultaneously, in the same direction. I don't believe a whole lot in correlations at all whether it's the dollar and anything else, or Bitcoin and in the Nasdaq, or Nasdaq inversely correlated DXY, whatever. I just again, these are all separate markets, but generally the lower the value of the dollar gets, the easier it is for price to increase on those other assets. That makes sense, guys? Let me see here. Rancam, what's up? Can you open a second chart on your layout and add Bitcoin USD index below so we can see a side-by-side comparison? We can do this. We can just add it right here. Add it right on top of it, right? So if we do this, actually, you know what? Let me use the BLX since it's the index, right? So we can do this. We can just put that on a new price scale here. Make sure we also get this to log, like the other one there. I believe we're on log here. Yeah. And so, yeah, I mean, here you go, right? Let's kind of get rid of these other things here. So say, again, generally, you do have this inverse relationship, right? But when you zoom in, there are periods of time where you do have rallies together, or you have, declines or sideways together, right? So it's not always a one-to-one, but generally, excuse me, you kind of look at that as well. I mean, look right here, you can see that at this point right here, right? You can see, let's do it like that, right? You can see that the DXY and Bitcoin rallied together, right? Again, if we look at, let's see here, this point right here, all the way over here, right? You can see them rallying together, right? So, when you get in here, you have like this point right here, this first point, which is about 84 days. And then you have this other point right here, which went sideways, rallied upward with both of them at the same time there for about 140 days, right? Yeah. So again, what we're looking for is generally, right? So in general, what's going on. And again, we just kind of go back to the best way to understand the DXY's relationship with USD priced assets is that as the DXY drops, what it's telling you is the value of the dollar versus a basket of other currencies is dropping. And so what that means is things that are valued in USD have less downward pressure coming on them. If it's rallying up and gaining in strength, then those things are going to have increased pricing pressure pushing down on them. So the value should drop generally. But again, it's just one part of multiple things that go into whether a thing, the value of a thing is going to rise or fall, right? Because you also have demand, right? Doesn't matter what the prices are if people aren't using it anymore. If you look at cars, right, and you can compare, a Model T versus, a modern vehicle, right, a Tesla, for instance, right, there's going to be a difference in demand, right? The demand for the Model T is going to be much lower than the demand for the Tesla, right? So just because DXY is doing one thing or the other doesn't mean necessarily you're going to get the equivalent movement in the value of the Model T or something. Hope that makes sense. Kind of extreme case there, but hopefully it makes sense with that. Fibbo, what's going on, man? Good to see you. So anyway, so this is what we kind of got going on here. Let's look at Ethereum real quick, guys. So this is this broader picture I've shown you guys a few times here with Ethereum, right? So on this drop down from basically, what is this? This is the daily chart from right around the beginning of April of last year until the swing low down here in June of last year. So what was that? May, June. So a couple of months on this downtrend, right? Your point of control, the area at which most Ethereum was traded, was this red line right here, right around $1,800, right? So we're watching that, and of course, this is where we started having this kind of bounce up against it, right? And then slightly above it, you can see here is actually the top of this right here, right? This right there. You see that? And so with that, that becomes the top of this kind of triangle that we had here. And we broke out of the triangle. I'm going to zoom in here a bit for you guys. You can see here that we broke out, expanding volume, larger candle spreads, broke out, pulled back, retested. On the pullback, notice we've got overlapping candles. We've got a significant decrease in volume. That's typically corrective. And then, of course, this rally and attempt to break out higher here. Okay? So, if we're looking at that, so far so good on the breakout here. We broke out, came back, retested resistance and support, and we're trying to break out higher. And now we kind of want to see that move higher. We are above, as you can see here, we moved in sideways between the daily pivot and the daily R1 pivot. And we're continuing to push higher toward that R1 pivot. So the question is, do we get up here and reject and potentially come back down here and then go higher? Or do we, here we go. Do we kind of break out higher, come back, break out higher like this? That's what I'm really kind of looking at here. So, it really comes into what goes on in this area right here now. Do we continue up or do we get rejected, continue lower here, and then continue up? I don't really think that we kind of do this thing. Not right now anyway, okay? Now, again, that could change as things happen, right? So let's look at the larger time frame. And here's a larger picture, right? Again, another chart that I posted out way back over here. Kind of, again, looking at that dragon pattern. Hank brought that up. So I went ahead and posted it on here. The way I kind of would look at it. And so if we get an impulsive breakout above the weekly pivot, that sits there right around $2,000. If we can get an impulsive breakout above that, expansion of volume, volume spike, expanding candle spread, initially we should look for a target at the R1 pivot, this green range here. This is 27.22 to 31.74, right? If we're looking off the bottom here in Elliott wave, right, we have 1, 2, 3, 4, 5. So we have on this here, we have a 1, 2, right? And so just based on that alone, if the bottom is in, we expect a minimum rally. I kind of got that off there on the bottom there, but basically up here at around 28.94, minimum expected, right? Now within this, I believe what we probably have here now is a 1, 2 right here. Okay? Let's see here. And so if that's 1, 2, this probably gets us here then. Minimum expected wave 3, right here around 24.8950. Notice wave 4 would pull back around the pivot. Wave 5 up here, just a little bit shy of that wave 3 target. So I could see wave 3 maybe overextending here. I could maybe see something like this. Wave 3 overextending to the bottom of the green zone. Wave 4 up a little bit there. And then wave 5 kind of getting closer to the R1 pivot, followed by a wave 3 here. And then, of course, again, looking at waves 4 and 5 here. Let's see, probably something more like this. Wave 4 should come back down toward the pivot again. See, here comes 23.22 or 20,083. Let's just say we get the initial one right there, right? Which, by the way, if we throw a line on here, look where that hits. The previous area of support and resistance here. So you get this push up through it, you come back, find support on it. And then basically you're looking for a higher target up there around this 37.51 at least, right? Now, along the way, you can get overextensions of wave 3s along the way. But, minimally, that's kind of where you'd be looking. Now, based on this pattern, again, you have your take profits here, your 3. You have the green range. You have this 37.75, and then you have this green range up here at 44.77.5 to 54.34 area. So based on the pattern, those 3 would be the targets. Based on Elliott wave, we've kind of got lower bit working into it, right? So yeah. So yeah, that's kind of what I would look here. In other words, Ethereum still looks good, right? Now locally, uh, you know, if we get rejected here at the pivot, again, we could see it pulling back down toward this 1725 area potentially. Or if it breaks down below that, then I would look at this weekly demand structure here, either around 1560 to 1460 kind of area. And in that case, uh, you know, that could just be a 1-2, 1-2. As long as this wave 2 holds the support here, we would look at it that way. And again, that would give us the overextensions here on the wave 3 and this wave 3, the larger wave 3s. So again, still looks good. We're looking for ultimately an impulsive breakout above the weekly pivot that closes above it. That's what we're looking at, right? So that's kind of what I'm looking for as far as Ethereum goes there, right? Ultimately, you're kind of just basically doing this thing, right? So kind of doing this. Let me kind of draw this out here. And then you've got this. And I've drawn this for you guys before too. Basically, you've got resistance in this area where you have this resistance support, resistance, support, resistance, 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 right? And then you've got consolidation here. You guys have to pay attention to this. This is consolidation, right? You're getting higher lows up toward that resistance. So even if we pulled back here, we'd still be doing this, right? We're looking for that breakout. Again, impulsive breakout above that pivot area, right? So based on this structure here, you can do a quick target here, pattern target. About that. Pattern target will get you up here near that secondary target take profit area, right around, I don't know, maybe 35.78 or so. Could be a little bit above, a little bit below. But generally, your pattern targets are your wave 3 target areas. They're near your wave 3. So whether it's a little bit above or a little bit below. So again, if wave 3, without doing too much overextension, you're going to be up there around the R1 pivot. If it overextends even more along the way, you could end up closer to that 35.78 kind of area, right? Fibaswani says, what here? What do you say, man? You said, for what it's worth, 24.51 is a key upside target for him, and then 31.46. So, again, 24, would you say they're 24.51? So that kind of gets you, again, right here around the 1.618 extension off this, that initial wave 3 area, right? I've got 24.89.55, and then 31.46, which gets you at the R1 pivot. So see, guys, even with the way that Fibbo uses, the way that Fibbo looks at the charts and whatever, he still gets targets that make sense, whether you're using Elliott wave or whether you're using pivots. You're still getting those same kind of target areas, right? So yeah. Brian says, so even if we miss this Ethereum move, the retracement to 2000 test would be a good entry. Yeah, I mean, generally, the way I would look at it is you're starting down below here, right? If you're getting an impulsive breakout above the pivot and you get rejected at the R1, you usually pull back to the pivot. And so it's not that I would blindly go long at the pivot, but I would, once we're getting down toward this area, I would start looking for a reason to go long. Maybe oversold on the daily RSI. Something, right? Maybe some bullish divergence and oversold, something like that. But that's what I would look for if I'm doing this. By the way, this is one of the things I'm going to be teaching in the, oh man, it's coming out. Oh, we're going to release this on Saturday, guys. So you've still got a chance to jump on it. We got this Pivot Point Master Course still on pre-sale right now. It's going to be $499 on Saturday. And after that, right now you can get it for $49. We also have the option to buy all the upcoming master courses. We're going to release one a month for the next 12 months, in addition to 2 bonus ones, a Hirsch cycle one for me, and then Fibbo's going to do one on Fibonacci, a master course on Fibonacci that you're going to get included bonus on that for the master courses bundle, plus 1 free month of tier 3 access as well. So you can jump in there and get that, texaswestcapital.com/pivot. pivot dash points dash MC. All right. So this is just what I just talked about here is one of the things I'll be discussing there, but there's a lot more things you weren't going to find. A lot of the stuff that I'm going to talk about in this master course is stuff you don't find anywhere else online. People just don't know it. And this is what you get when when all you do is trade pivots for a couple of years. You learn a whole bunch about it. And I'm going to share that with you all in that pivots points course there. Okay. So, but yeah, pivot points, man, I don't care what you're trading or how you're trading. If you can master pivot points, they're going to add so much structure, so much support to the way that you view the charts, the way that you trade the charts. And it's going to make decision-making a lot easier. It's going to make targets a lot easier, no matter how you trade the charts generally. So anyway, just something to definitely pay attention to. Even if you don't do it through our master course, learn as much as you can about pivots. Okay. Let me see here. Christopher H., what's going on, man? Oh, yeah, they're right there. That's where you can buy the course there. C-Mac says she's looking forward to it. I hope everybody that gets it is looking forward to it. Again, guys, those of you who have been following me for years, I've talked about pivot points and their importance and how they can especially help new traders in understanding market structure. And so, finally getting together to put that actual course together. And I've loved doing it. I'm loving doing it. So I hope you guys get just absolute ton out of it. Let me see here. Andrew Bennett says Bitcoin 15-minute chart. Okay, you guys want to look at Bitcoin? Let's look at Bitcoin. Let me see here. So here's a couple of charts that I've posted, right, over the last few months or longer, right? So we have this initial one right here. This is the 3-month chart, okay? This is a pivot or a pitchfork coming off the October of 2011 swing low up to the next real swing high, which is October of 2013, and then back to the subsequent 3-wave decline swing low there around January of 2015. And you can look at this and see how well prices adhered to this, and even the interior levels here, right? Locally, you can see here on the 3-month how we got this descending wedge and then the breakout in January of this year, right? So January, February, March has this nice, huge 3-month candle, which rallies right into the monthly, weekly, monthly pivot right here. And what you'll notice is the current 3-month candle, quarterly candle, which opened this month, has tested that pivot as support, and it's breaking out higher. So again, the idea that everything else aside, as long as this weekly, monthly pivot is holding its support, I expect a rally at least to the R1 pivot, at least to that area. And if we get rejected there, then I expect it to pull back down toward the pivot area, and then I would look for a reason to go long and rally it back up. Okay? So even if you're not fully convinced that the bottom may be in and you're too scared to go in, I can't guarantee it will, but most likely we'll get a pullback down toward this, maybe 27 or 31,000 area. A rejection up there around that R1 pivot would pull us back there. Okay? So that's what I would kind of be looking at there. The BLX is what? It is the Brave New Coin liquid index for Bitcoin, okay? It's an index based off of the exchanges as far as Bitcoin price goes. It only goes down to the daily. It doesn't go any lower than the daily. You'll notice they're kind of grayed out up here. It does daily and above. But it gives you more of an average price, more of an index price, a weighted index, right? It takes into consideration, like, it gives a certain weight to the Bitcoin price on Coinbase and whatnot. If you guys don't know, market makers, when they're in there providing liquidity for the exchanges, they run averages based on weighted indexes of the other exchanges. So if you have a market maker providing liquidity for like Bitstamp, right? What they're using for that price that they're using is not the Bitstamp price itself. They're using an index based on weightings of Coinbase and Bitstamp and Phoenix and probably Binance, right? And each exchange, like the DXY, each one of those inputs are weighted differently depending on the significance of the exchange in terms of likely real volume, stuff like that. So yeah. So this is just again another index that's weighted to specific exchanges to give you an average Bitcoin price. Okay, so that's what it is. So it's going to be a little bit different most of the time. Just not anything that makes any difference really, but a few dollars difference usually between it and maybe some other exchange itself. But you use this because this one gives you information all the way back to the beginning, right? All the way back here to 2010. Whereas if you use Coinbase, for instance, it only goes back to 2015, right? Bitcoin price. So you can't get any better understanding of Bitcoin price prior to that just using the Coinbase exchange. So you think it will go to 40,000 first. You guys are funny, man. Always trying to get people locked in on it. I think that depends on what's happened right here. If we can get some impulsive breakout here, I think there's a good chance we can get 5 waves up to 45, 50,000 to finish a first wave up before we kind of come back, right? So if we're looking at the 3-month here, you're going to have this supply structure on the 3-month. Looks like this, right? So the EQ of that is right there around 57, 58,000. The bottom of it is right here around 46,000, right? So I think there's a possibility we can get 5 waves up that enters in this range here, that 46,200 kind of to right around 57,200 or 300. I think there's a good chance from here that we could get 5 waves up into that and get us a wave 1, and then it'll pull us back on a wave 2, and then we'll break out on a wave 3. So yeah. I now, can I guarantee that? No. Again, I'm looking for, we need to have an impulsive breakout here that carries us really well toward R1. And as that happens, I'll be evaluating it. But the idea is that you're going to have an overextension of wave 3 in here if that happens to get us up to that. I could just as soon see, a rally up to the R1 pivot and a pullback, right? To the daily or to the weekly, monthly pivot here. So that gets us a 1 to the R1 pivot area, a 2 back toward the pivot area, and then a 3 up. I can see this, okay? So it depends on how we progress through here. It depends on how we progress through here, okay? So I couldn't tell you right now that we're definitely going to do that. And I never say we're definitely going to do anything anyway. It's always, is there a chance? And what are we kind of looking at? What do we need to see? As a trader, guys, if you sit here and go, oh, well, it definitely has to do this, then you're most of the time going to get it wrong because there's a lot that can happen along the way, right? You have to be able to understand what's going on in this area. But generally with pivots, you can see this 1, 2, 3, 4, 5 kind of thing, right? Not to those exact levels, but basically that idea, right? Or you could see something like this and it leaves everybody waiting for that 25 and lower as it just does something like this. And we kind of get out here and we break out higher. So what's going to determine that is what goes on now as we continue to push up here, okay? My phone vibrating is still driving you nuts. What phone vibrating? I don't have any phone vibrating, Hank. The VPVR here, here's my VPVR set on here, guys. Row size is 283. Value area 70. Width is 13%. But yeah, all I do is add, I usually put that around, let me get this back here. 283 usually, or 300, right around there. No, it's not. No, Hank, it's not. My phone is not on my desk and not vibrating. So you're hearing things, man. But yeah, so I mean, that's what I do. And so it's based on whatever TradingView bases on. So probably not ticked as far as that goes. But that is what it's based on there, right? Nothing vibrating, Hank. So anyway, as far as that goes, that's what we're looking at there. If we zoom in here, here's another chart that I've posted recently. Well, not too long back, right? Again, noting, again, I've been posting charts for months now, guys, talking about things that we're looking for that suggest that maybe the lows are in, right? This was one of the more recent ones I've done, which have added to other things I've posted already, right? Again, the idea that we've got the breakout from the descending resistance, right? Off the all-time high, right here. And now through that, right? And not only that, but we got the breakout and then the pullback to retest as support and then the breakout higher. We have price back above this blue line here. This blue line is the 200 MA on the weekly, okay? So we're above that, right? What else do we have here? The only thing we have kind of different here is we've got this green line here is the 50 MA, and it crossed below the 200 MA, right, where price was, right? And you got this reaction here. This is this pullback reaction, but we pushed up. So you've got this, what people would call a death cross here. Again, guys, I'm not a big firm user of death crosses and golden crosses. But, again, if you are, it got its pullback here. It's done. The death cross is done with this pullback down toward, 19,500, 600 area. And then we broke back out above both of them, right? What else do we got? We've got down here in the bottoms, you can see that we've got from the swing high and oversold and overbought down into where it dips into oversold. And usually when it dips into oversold, that indicates a bottom, right? It goes up. It happened again over here in 2015, 14, 15. I'm sorry, that was that one over there. This is 2017 to 18. Up, right? Now, this one did the same thing, right? But we did have one final lower low here. Okay? That was the drop down in there, and then we got this kind of bullish divergence. So that's a little bit different there, but nonetheless, we ended up getting bullish divergence, and then we took off, and we're getting to that overbought area now. So, I mean, again, here's what we talked about here. Same thing. So, again, if you're concerned that maybe the lows aren't in, well, generally these things happen, as you see here, historically. Now, does that mean they have to happen again and it means the same thing? No. Something different could happen. But when you're trading, you should stick to probabilities, right? What has happened consistently over and over and over again? Because if it's happened consistently over and over and over again, then it gives you a little more confidence that if you see it happen again, that you're likely to get a similar result. No guarantees, which is why risk management is so important. But nonetheless, it does increase the odds that it's going to. Does that make sense? You got too many TV alerts going on, Hank? You guys are funny talking about all that, the vibrating thing. Nothing even vibrating on my desk over here. So, but anyway, yeah. So, again, looking for, it's continued movement up, right? The other thing here, every time price, after you have this potential bottom in and price breaks out above the 50 MA on the weekly, that usually signals that the bottom's in. So again, you have this potential bottom being in here, and we've broken out above the 50, right? The 50 MA. And so that usually indicates, as it's done previously, that bottom's in, right? Rallies after that, we usually look for that 61.8, right? So 61.8 there, 61.8 again in June of 2019. So if we're doing the same thing where we get a pullback at the 61.8, right? Then that means we're potentially looking at a rally up to 48,500 area at least. So again, what I was talking about earlier, potentially seeing a wave one rally up into that upper 40s or lower 50s kind of area, we could potentially see that. And if we kind of do that, then our pullback, again, is looking 50% get you around the 32,000 area, which is, if you guys will notice, This cluster right here. It's at that cluster, right? It's the one where we found resistance right now. So again, if we can impulsively break out above it, most often what I'll expect is something like this. We're going to move up, retest, ultimately head up toward here, right? And then that'll create 5 waves up here. So that's a 1. 2 comes back down toward this area. And 3 will get us that breakout there. So same thing I talked about earlier, just showing you, why would we expect this? If you get an impulsive breakout above this, if we don't do this sideways thing here, and instead we just get nice big candle breakout through it, then usually it'll come back and retest it and continue up, and then it'll retest it once more and then continue up. Okay? At what time would we expect that 61.8? Your guess is as good as mine. I don't do time, guys. It's too easy to get it wrong consistently. So I don't worry about time. I'm a price levels trader. I usually I find my price levels and then I go, I trade for it. I don't worry about the time that it takes to get there. All right. So again, there we are with that. Let me see here. What else do we got? Let me see here. We've got gold, right? So gold is doing pretty good. Let me see here. What do we got? Gold. Gold futures. Let's see what we got with this old chart here. Yeah. So again, the idea that we've potentially got a 3 and a 4 here, and we're heading up, right? Maybe a wave 1 up into here, but really, this could be 1, 2 right here. Again, we broke out above the pivot, pulled back, tested the pivot as support, rally back up, right? So right now, I'm kind of looking at it this way. 1, 2, 1, 2, 3, 4, 5, 3, 4, 5 here. So I'm looking for it potentially nearing a top. It doesn't have to be right at the swing high, right at the all-time high, but potentially right around this kind of area, right? Now, again, if we do this, if we get up here right around that all-time high, right? We pull back and it gets us 1 wave up. The 50% comes back to the pivot. Again, this is one of those things I'm going to teach you that I'm going to be teaching in that Pivots Point Master Course, right? When you're using Elliott Wave and you get the specific structure, as I've been talking about already, again, you get the R1 pivot, 50% pulls you back to wave 4, which is at around the weekly pivot, right? Or in this case, the weekly pivot, but the pivot. And then they get you a 1 and a 2 and a 3 higher. Now, we could potentially, if this comes out, we could potentially see 2750 for a wave 5 target, or even a blow off, which pops up even higher, right? But just based on the height of wave 4, we would expect at least a wave 5 target of the 1618 extension around 23.75 and 70 cents. But based on this right here, if this is a 1-2, we're likely going to head higher with that up there. So Ericwin says, your forecast is pretty much the same as mine, but I still expect the blow off this year, in my humble opinion. Yeah. Again, possibly, right? Again, we look at, this is something we've been talking about now is, do we get a blow off this year, blow off top, or do we continue to rally for a few years? If we get a blow off top this year, that should be a wave 5. So whether you're looking at Bitcoin, gold, stock indexes, whatever. But if we continue to rally, if we continue for a few years, it could mean a really overextended wave 5, or it could mean this is generally a 1-2 of the 5th wave heading up, right? And you just would have to come back in and change the wave structures here, right? But gold, gold, we're right up there, guys. All-time high, sitting right above us here. Resistance right now off this all-time high. And then the swing high up here, the rejection in March of last year. We're coming right up to that. Yeah, let me kind of take this down a little bit here. So there's this big, huge, thick line there. There we go. You can see it a little bit better here, right? And so in terms of patterns, we've got a descending, broadening wedge, right? Starts thinner up here, it widens out. You can hear you got a deeper degree of decline at the support than you do at the resistance. So again, if you're doing pattern targets, if you don't believe in the hocus pocus of Elliott wave, you can look for a breakout target of around, depending on what when it pulls out here, basically about $570 above the point of breakout. That should get you up there around that 2600 level, 2630 level. Okay. So we'll see how it turns out, right? The pivots points course is separate from tier 3, right? Yes. It's much more in depth than anything I've talked to you guys about in tier 3. Yeah. And of course, it's lifetime access to that course when you get it. But yeah, it'll go in a lot more depth, teach you a lot of different things about it. Again, everything's listed on there. It teaches you how to use it with other systems like Elliott wave or Wyckoff and other things, moving averages, price action, stuff like that as well. So that way, not only are you going to learn how pivots points, how to trade them alone, but you also learn how to incorporate them with most different ways of looking at the chart. So yeah. Justin's son arrested in Hong Kong? No way. What do you get arrested for? Chris says, how are we going to have a blow off if record inflation, lowest savings, highest credit card debt, people can't afford a house, a car, food, in a monetary tightening environment, not to mention not even to the halvening. Yeah, but again, generally we expect a new high after the halvening, right? Sure, that's my default view. But if we are at the end of a super cycle, if we're at the end of a credit cycle, then things can be different, right? If we're printing a fifth wave, it could be different than the previous waves, right? Because it would be a terminal event, right? So it's not that I'm saying we have to have a blow off top. I'm open to that possibility. Okay. And that possibility would be based on the idea that we're coming to a termination of, in Bitcoin, for instance, 5 waves up, right? Or a fifth wave up from the, in the super cycle sense for stocks, for like the Dow and whatnot, okay? And so coming to that fifth wave top can produce something different than what we're usually used to, because it wouldn't just be an internal correction. It would be a correction over the entire 5 waves, right? Does that make sense? Yeah. Eric one point makes another good point as well. He says the stock market is not the economy. Yeah. We do have, $5.5 trillion in money market funds. So basically money sitting on the sidelines right now. Yeah. We have, a lot of things going on. And the way the economy looks today may not be the way it is 3 months from now or 6 months from now. Again, when we talk about macroeconomics, the reason why people get that wrong so often is because there's so many moving parts. We can get some indications that say, oh yeah, these indications usually mean that we're going to get a recession or something, right? But until it actually happens, this build up to the recession or a depression or whatever could take longer to play out. We could do things to a much greater extreme than we've ever had it in the past and just keep pushing until finally it gives way, right? Again, we go back to that idea that the market can stay irrational longer than you can stay liquid, right? So that's why I'm a big proponent of basing my macro analysis off the charts first. I understand macro. That's part of my, structured educational background, economics and applied economic psychology, stuff like that, right? At the master's level. But I would never say this is what's going to happen based on that. Instead, I look at the charts, and with my understanding of macroeconomics, I say, okay, is this more likely or less likely to happen, with the chart as the starting point? Because the chart gives you what the market's already feeling. Everything that you think's going to happen is already priced into the charts, right? Does that mean we know that some news event's going to happen and price is going to go the other way? No. It just means that we know we're expecting potentially a rejection, right? Or support. But, again, as far as trading goes, that defers a lot toward, again, most people look at charts and they say, okay, what's happening on the chart is going to cause something to happen. But that's not the way to look at it. Something happens in the economy because of everything building up to it. And that is shown by people's interaction with the market. People decide, how do they feel? Do they feel good about life at the moment? Do they feel not as good about life? Or do they feel bad about life at the moment? And the aggregate of that is shown on your charts. It shows you if you got a business owner, right? A big business owner, or let's say a huge company like Apple, right? And Apple thinks that there's going to be a decline in demand for their phones. Well, they're going to kick back, right? They're going to slow down production. They're not going to buy as much. They're going to lay off people, right? And all that shows up here in the charts, right? The decreased investment, the decreased production, all this stuff shows up in the charts, right? All that's already there. And so when you have enough of the ingredients in the chart, price reacts accordingly. Does that make sense, guys? It's a different way than most people look at the charts, but it happens to be very lucrative, okay? This is something that it took me, over 2 decades of being in the market to really kind of come down and figure out. And then I found a book called The Socioeconomic Theory of Finance, which basically more or less lays out the same idea. It gives you a whole bunch of historical examples as well. I would, if there's one book that I would suggest that you guys could read to get an understanding of market, if there's a couple of books, they would be the original books by Richard Wyckoff from 100 years ago. They're really inexpensive on Amazon. You can find them online, really inexpensive, few bucks, right? And then The Socioeconomic Theory of Finance. I would suggest everybody read those. And then you start getting an understanding. Now, as you get more into it, I would suggest you get into cycles, things like K waves, right? Contrative waves. That's an understanding of business cycles and stuff like that as well. Guys, the fact is we're living organisms. Even as a group, we're living organisms. And living organisms, progress according to cycles, right? Life through death. There's cycles, right? And that's what we see. So, if you really want to, overall have a really good understanding of markets and whatnot, that's where I would really begin and go through to get there. Okay. Do you need to know Elliott Wave to do pivots? Not at all. Not at all. Pivots are completely their own thing. It would be this. You could trade pivots like this, right? Just by themselves on there. Now, if you happen to trade Elliott Wave, I'm going to show you ways to use pivots to make your Elliott Wave trading better. To increase the likelihood, that you're getting the proper pullbacks and targets. But not at all. It doesn't require it. No, not at all. You can trade pivot points exactly on their own. But they work really well, again, with however else, whether you're using price action, Elliott Wave, Wyckoff, whatever you're using to actually look at the charts. Hopefully that makes sense. Hey there, Silvio. Good to see you, though. Good to see you, man. Can't even say that. Fibaswani agrees. He says the socioeconomic theory of finance is the shiznit, right? Deadly123. Yes, the Pivots Points Master Course is going to drop on the 15th on that Saturday. I don't remember when I've got it set to drop yet, guys. So it'll drop sometime that day. Don't freak out if wherever you are in the world, it's not open the minute it becomes the 15th. I forgot what I set the time at the moment. But sometime on the 15th of April, Central Standard Time here in the U.S., right? It will open up for you guys on there automatically, and you'll be able to see it. Okay, so it is. My 2 sites are a mess. We're moving things over, Hank. Thank you for your input. Yes, we're moving things over to the Texas West Capital site. Now that we're getting that up, I'm currently migrating new members over there, and then we'll have everything that we offer as services will be available over there. For right now, if you want to join Tier 3 or you want to join Tier 2 or Tier 1, you still got to do it on howtotradetowin.com. But like I said, over the next few weeks, it's all going to be over on TexasWestCapital.com. So, yeah. So if you go to TexasWestCapital.com right now, And you go to the homepage, you can get into Fibonacci's threshold theory through that link. That's the only one though. Tiers 1, 2, and 3, you won't be able to do yet. If you go to that link that Hank put on there, which was the same one I showed earlier, which is texaswestcapital.com/pivot-points-MC, that'll take you to the landing page for the Pivots Points Master Course and the Master Courses bundle, which are both offered down at the bottom of the page. But if you purchase one of those, you'll get an account set up on texaswestcapital.com. And if you are already a member of Texas West Capital, again, I will be migrating you over there and putting your two accounts together as we continue on over the next few weeks over there as well. Hopefully that makes sense, guys. Whole bunch going on, I'm telling you. The Pivots Point Master Course, it'll be for sale forever. It'll only be $49 through this week, right? Sometime this week, that's going to come down again. I forgot what day I set that to get off there, so I couldn't tell you right off the top of my head. But come Saturday, it'll be available only for $499. So full price at that point. Once you buy it, it's yours forever. You always have access to it, okay? So, all right. So anyway, there we go with that. What other charts do we have here, guys? Let's see here. There's your gold. Let me see here. Oh, let's look at real quick here at the E-minis. Right here. I think I've got it on here somewhere. Yeah, here we go. Let me see here. So here we go. Okay. So again, the idea is possibly that we've got this kind of count going on here, right? So coming off that COVID low here, it's possible we've got 1, 2, 3, 4 as a see, I'm not so sure about this because we've got an overlap here. Now it's only a wick, okay, on the weekly, it's a wick, and it is futures products. So the way that Elliott wave is taught is normally the only reason you'll get a wave 4 breaking into a wave 1, violating wave 1, is if it's an ending or leading diagonal, right? But you can also get it if you're dealing with a futures market and it's just a wick into a wick. And so that's what we have here. We have potentially a wave 4 wick into a wave 1 wick in a futures. This is the S&P 500 E-mini futures. So looking at that, it's possible there. And if this is 1, 2 here, right? Then that would potentially give us a wave 5 up here at 5127.25. Now, based on the height of this, now that's just based on this being a 1, 2 here, okay? It's possible that this could maybe be a 1, 2, 3, 4, 5 as a leading diagonal. So this becomes a 1, 2, or this even becomes an A, B, C to give us a 1, 2. But based on the height of this being a wave 4 here, right? We're looking for a wave 5 to potentially target that 5,611 kind of area. So me personally, as I look at this, my general target is this 5,611 area up here. As this continues playing out here, we'll see, what the count actually is. But based on this being a 1, 2, without any overextensions, the target would be 5127, which is still a new all-time high there, right? So yeah. Let me see here. Let me kind of catch up with you guys here. Fiboswani, have a great day, man. Do I remember Sol USDT? Can you help with targets? Yeah, I mean, I'm still looking at above 50 on that. Again, if you guys were watching the Wendy O show on December 30th or 31st, whatever that was last year, that's where we bought down there in the mid-9s. That was that swing low area. And I said it looked good as a buy. And I said, if we get above 15, we should be looking at 30. And then most recently here, a few weeks back, I said that we're looking probably at 50, at a 50 somewhat dollar target. But right now, let's see here. Let's see. So look at that daily. Look at that nice daily candle on Sol here. So this was when I was on the Wendy O show back over here, and I mentioned buying it here. We didn't quite hit 30 yet. We hit 27.12. So pretty close to it so far. Looking at that is likely a 1-2 here. And then that would give us, based on that 1-2, it gives us a 3 up here at around 46.73, and then a $54 target for a wave 5, which just happens to be the EQ of this supply up here, right around that 54 area. So that's what I'm kind of looking at there on that. Again, Sol USDT, right? Now locally here, we've got a 1-2, it looks like, right? Maybe like a 1-2. Let me see here. Maybe like a 1, 2, 3, 4, 5. Then A, B, C here. So that gets us a 1-2. So locally, that gives us a wave 3 around 32.14 and a wave 5 right around 35.16. And that actually puts you right up here in this supply structure right here. I can't even do this. There we go, right about there. Right there around the EQ, right around that 35.16 area. So locally here, that's more of a local target, and then we've got the bigger target, at least up there around 54, but we could probably see some overextension on the way up, getting us even higher there. Why I don't put a stock referral link below? What do you mean? What do you mean a stock referral link? So anyway, that's what I'm kind of looking here for Sol. And of course, once we're getting above kind of this area here, right? This 26.5 to $48 area. I mean, we open up to the upside here, right? Then we should be looking at $100 and more heading up there. So once we get kind of through this cluster, this cluster here that we're getting into, see, it's the same cluster as right over here previously in 2021. Same cluster area. Once we're breaking out above that, pretty easy move up, pretty easy move down. I mean, we should be looking at 90, 100, 110, 120 up there in that area. Once we're kind of breaking out above that, right? Yeah. Stock exchange. I just saw you put a Femex reserve. I didn't put a Femex referral. Are you talking about on Twitter? That just automatically posts with when it lets you know that it's going live on there. I don't necessarily go out there and just post these to do whatever. I don't have any stock market referrals. So, Femex is what I use. Choose to use it or not, that's up to you. I like their execution and whatnot. I like that I can do contracts on there. So I posted on there for that. But again, definitely not. I'm not the guy out there shilling referral links like everybody else. People ask, what do you use? And if there's a referral link, I'll put it on there. But I don't make my money, any significant money through referrals, right? So yeah. Hopefully it makes sense. Is Femex better than Coinbase? It depends on what you're looking at, right? So, I think the order execution is better, right? It has different things compared to Coinbase. You'd have to see if what it offers to trade is better. It does offer contracts, which Coinbase doesn't. It does offer leverage, which Coinbase doesn't. And as a matter of fact, Femex recently is allowing you to use up to 5 times leverage, I think, on spot now. Margin trading on spot. So, again, if those, that was some I used to use Kraken for a lot, and I still do sometimes. But now Kraken's got that whole, I usually don't push it so much because now they've got the qualification, like the really high level qualifications that most people don't meet in order to use their margin products if you're in the US. So I don't usually push that anymore as far as that goes. I like Kraken. Kraken's been pretty stable and whatnot as far as the exchange goes as well. Bittrex is closed down now for the US, basically for all intents and purposes. So you can't use that anymore. US, we're just really kind of limited to what we can do, right? I'm not sure how long Femex will keep allowing people to sign up without KYC. They still do it right now, so you still did after that, though. If you're a U.S. citizen, they might get to a point where they say we're not going to do that anymore. But if you're not in the U.S., it's not an issue, right? Stuff like that. So yeah. Again, I like Femex. I like its order engine's good. It's quick usually to get my orders in there and do real well. So I like it for that. But you in the fees seem to be quite a bit less than what we pay at Coinbase. So if those things matter, that might be something you're interested in. So yeah. Let me kind of catch up with you guys here. Data says Femex support and direct, what'd you say here? Support and direct contact with them is outstanding. Errors reported get fixed literally within hours after reporting them. Had a lot of good experience with Femex. So yeah, there you go, guys. Okay. But yeah, Hank says he's tested Bybit, Femex, and Binance. I'm not sure which one you're saying is still the best. You're saying you've tested Bybit, Femex, and Binance. I'm not sure which one you're saying is still the best. If you're saying Binance is still the best, unfortunately for US, we can't join on them, right? Lamb, Femex right now apparently is still allowing US persons to join. So you'll just have to check it when you get in there and see if they're still allowing it. But the last I heard, they still were. So yeah. Anyway, but like I said, no issues at all with Femex. I haven't any issues with it. So I've been trading it for the last bit here now, and it works. It works fine for me. Now, depending on who you are and what you're trading, maybe you've had a different experience, but I haven't found anything yet that makes it awful for me to trade yet. Let me see here. We got to get ready to go here, but let me see if there's any other chart I can look at here. What's going on with well, let's look at the Grayscale Bitcoin Investment Trust here, right? I don't even know. This chart looks old. Oh, okay. Here we go. Yeah, look at that. This is an old chart. But I do have right now, it looks like I've got a wave 3 that I'm looking at up here at around this gap fill. So maybe somewhere around 24.30 or so. And again, with pivots here, 3 up there, 4 to the pullback above the pivot here, 5 up toward $31. And then that gives us 5. So it gives us 1, and we'll pull back for 2 down toward the pivot area again on the weekly here, rallying back up. So, we've broken out above the weekly pivot so far this week. We just want to see some continuation higher there. We just about filled in this gap here from the week of January 13th. And then we do have this other one up here the week of May 16th, May 9th of last year. A gap there if you're interested in gaps. But ultimately, it is that's that resistance support level right here. So this right here going all the way back here to 2020. You see how that target level has that resistance, support, gap through. Looking for a rally up toward that on that. So yeah. Do BNB. Okay, I'll jump on BNB here real quick, and then that's going to have to be it. Let me see here. What do we got here? Yeah, so ultimately here, you had your descending resistance. We broke out of that on volume and candle spread, found support at the pivot. We pulled into the pivot, found support on it. Just a slight wick below, which wick, it looks like just below this swing low here, $300. Yeah, 50 cents lower, $299.50 gives us the kind of this bullish SFP almost in that area. Rally up. We've broken through the, as you can see here, this resistance support area right around $330. We picked out above that. We're starting to pull back. But again, off the lows here, that looks like a 1-2. So again, coming off that, I've got, as you can see here, I've got this as a 1, the big 1 over here on November of 22, the big 2 down here on December of 22. And off that, I've got an interior wave 1 to wave 2. And then within that of wave circle 3, I've got this 1, 2. So that gives us a local wave parentheses 3 target at 431.40. And that's my next target area I'm looking up. We want to get through this blue structure here, this supply structure on the daily, huge bit here. So we want to get above that to continue up there. But, we're kind of getting right up into that right here, getting this pullback. But ultimately, should continue higher off that. Looks pretty good. Like I said, 431 is kind of that next target area I've got on there. All right, guys. So that'll do that. Let me see here. Not interested in gaps, interested in profits, Entertainer Lamb says. Well, so there you go, guys. That's kind of what I'm looking at here. Again, if nobody's able to convince you to buy right now with Bitcoin and whatnot, that's okay. The idea is we should probably rally up higher toward that R1 pivot at least, and then get a pullback down toward the pivot. May not hit the pivot, may stop prior to it, depending on how high it rallies first. Again, if we're rallying all the way up toward 45, 55,000 in that area, then we should expect only a pullback toward around 32, 33, more likely than not. So that'll get you prior to the pivot on that weekly and monthly pivot there. So, but you should have a chance to buy on the pullback. Now, where is that going to be? I don't know. With what we're doing now, there's a good chance we could rally up through April and May and then pull back for that wave 2, right, toward the pivot through the summer. And then maybe, get one of 3 by the end of the year. And then pull back. I mean, the other way we could look at it is maybe we rally up. I don't know. I think it's probably where it is. Usually we don't break out to a new all-time high until after the halving. Halving is going to be end of March, beginning of April. Right now is where it's predicted to be. So I wouldn't expect normally. My default view is that we probably won't have a new all-time high until after that, which means, that we'll get our first wave, our sub wave. If this is wave 5 off the November low, right, then wave 1 of 5 is going to complete prior to the halving. And, generally speaking, it makes a lot of sense that either that second subwave of wave 5 will lead into the halving, that pullback will lead into the halving, or subwave 2 of subwave 3 of wave 5, right? So again, you have the idea that you got wave 1 up, wave 2 on the pullback, and then you have wave 1 up interior, wave 2 pullback, and that becomes a happening. But either way, again, my default view is that we wouldn't get a breakout to new all-time highs until after the halving. But with what I mentioned earlier about the possibility that we could have some crazy rally that has a blow off top here this year, and everything just all of a sudden doesn't do what it's always done previously. So we'll continue to watch what's going on with Bitcoin here. I'll do this twice a week, guys. If you're with me in Discord, again, we do Bitcoin updates multiple times a day, video and written updates. And so usually, I give you the big idea, and then we talk about what's going on locally and possible targets locally, but always within the frame of the more important is that larger idea where we're looking for price ultimately to go. So a lot of that going on there, okay? So, Toby, you're saying Bitcoin conference around this May 20th of this year. Will it be a top signal like last year's Bitcoin conference at late March? Could be, right? Again, could see this nice rally up through April and into May. And then, again, they always usually say sell in May and go away, right? You stay away during the summer, you come back after the summer, things start rallying again. So yeah, there's kind of a different, not really a different thing. I mean, it's just kind of the way we usually look at it, right? All right. Anyway, guys, I mean, that'll do it here. As always, remember the only thing you control in the market is how much you lose. So please keep working on that risk management. The most important thing you guys are going to do. That's your holy grail, guys. You come in thinking there's some system or something. It's your holy grail. Your holy grail of trading is risk management. Once you understand that as a human being, you're inherently, infinitely infallible, or fallible, I'm sorry, not infallible, but fallible, that should give you then a lot of reason to work on risk management. It saves you from yourself. You can't possibly know the decision tree and all the possible results from all that to make a decision, right? You just really kind of know the here and now and maybe a little bit beyond that, but that's it. That's it. So risk management is where it's at. So make sure that you guys are putting most of your effort into that, all right? Other than that, join us, Texas West Capital. We'd love to have you there. Hit the like, subscribe to the channel, whether you're on Twitter or YouTube or whatever. We'd love to have you there. Comment. Leave your comments. I'll answer if you've got questions in that about the show. And other than that, guys, if I don't see you in Discord, I'll see you on Friday, 11 a.m. Central Standard Time, and we'll see how things go after CPI release tomorrow. All right? All right. I hope you guys have a great day. Trade safe. And man, oh man, that'll do it. Take care.